All right, we got about 2 minutes to go. Uh, this is the last day for the scan, so we'll actually uh, put that up. But let me get this off of freeze. Stop it from switching screens here. All right, we're good. All right, somebody sent me a question about MDT because they had gotten an alert, some type of ratings thing. And of course, if you have it in your account and you're set up to get those types of notifications, you'll probably get one. I got one as well. Across the board, across all the portfolios that MDT was in. It's Medtronics. It was just a analyst rating. I don't even remember what it said. I posted it on Twitter, but we don't put a lot of weight into that type of stuff. It's great, hey, if they're pumping it, whatever, we don't care. We have our strategy built in. You can see by this chart here, it went up substantially. It got down to what, 120.59. Let's see what it actually hit there, if it'll show us. And we're open. But anyways, we'll see what this does. I mean, I don't put a lot of weight on analyst ratings. Just think the bottom could drop out of this. I mean, I've just seen it too many times. So, I mean, buyer beware type thing, analysts, it's opinions, and you don't know how much of that stuff is controlled or manipulated. You just don't know. That's why you stick with your plan. Forget about the charts and all these fancy indicators and gimmicks, because that's what they are. I mean, if you can make it work 100% of the time, then it's legit. But yeah, it looks like let's see what the opening flat. So typical Friday, you might see a little bit of selling somewhere, but looks like a typical Friday. Nobody knows what they're going to do. Got a lot of green on the screen now. We'll take a look at them, see what's actually happening. Which one was that? AFG. Yeah. I guess that's our second position in that one. SSB. Well, pretty flat. This is where you just go over your, you don't have to be here for the opening if you have your orders in. And basically this is, education for those that are just starting out on this journey. If you're, a veteran and you understand what's actually going on in the markets, this can only help you reduce your risk, and maybe not try to go for as big a profits. I mean, everybody wants to get rich quick, right? But the more you try to go for, or the further away from this average price that you go, I mean, you have two options, right? You can either put it real close, be your target price, but then you have to ramp up the amount of shares that you own. If you're going to, what's this, 79 to, let's just make it 10-cent move, right? So it'd be 19, or I'm sorry, what are we at, 79? So 10 cents would be 89, right? So 89, if you wanted to make any money at all, then you have to have some shares. So that means putting more money at risk. All right. All right. Bought ITW. That's what we're waiting for. Just something to hit so we can work. And you're usually just going to see this in the morning hours, unless something breaks, you know, during the day. Need to look and see what our, we'll show this here. I'll slide this over. And what did I say that was? ITW. So there it is right there, right? So it's on the scan. And the scan is done for this week, and that was green, wasn't it? Take a look at that again. Yeah, it was green. So we're going to go on this particular account, but we're going to go over to Classic and do our thing. So same thing every time. 235.99 plus the $4.56 dividend. That's what we're targeting. We add $1 for the one share that we have. So we're just going to move it up to 241.60. That's to cover. Dang it, thing moved on me. ITW, where's it at? There we go. Close. 241.60. 41.60. So that's our target price. Yeah, I get that. Something new that came out on there. So ETN as well, but ETN. And if you care what the company is, that's up to you. I really don't. I mean, if they're paying that type of dividend on a small account, I mean, $4.56 for a year, that's worth it to me. What does that come out to? 1.9%. So let's get that ETN in there as well, and then we'll both load them up. So 148.58 plus the 318 plus 50 cents because it's $1 extra, and so we're 152.30. You can pick whatever you want as far as your target price, but we're looking for occurrences. We need numbers of occurrences. All right, so let's take a look at the charts. Go to ETN. All right, we'll file that. Chart it. ETN. Go over here to Twitter. Go back and put those in a second. ITW. Like you say, we don't know where this is going, right? But we're sticking to our rules. All right, we'll go back to Mosaic and we'll fix our charts up. We should have these on here. ITW. This is our DCT cycle that we're working with here. There's several different strategies, but we like this one best because it keeps us in and collecting dividends. with as least amount of risk as possible. Because the market keeps moving up, we have, we're constantly cycling through stock after stock after stock. It's not like we buy it up here and it just comes down. But if it does, we're going to pick up another share down here at 214. Then the next level would be down here at 192. There is a strategy past that point, but if you can't figure this one out, if you're not interested in it because you don't think you can make any money this way, there's no reason for us to talk about it, but it will come out in the book. If you'd like to get the book should be ready by the end of the month. Hopefully. We'll see. What was the other one? ETN. Guess we need to get that on there as well. Where'd it go? TN. Set the chart up the same way. Perfect. So now it's just a waiting game, right? Usually it takes about 15-20 minutes before we start hitting. We get a better idea of when we start getting these orders coming in, you either buy and sell. Usually you get your buys pretty quick. There was one that was supposed to sell. Let's take a look at the not sure if we missed it or not. Not on that one. Let's check on this one. Oh, no, that was yesterday. Yep, so no, we didn't, no sales yet this morning, but it's only 10-11 minutes in. So we're good. We just sit back, relax. Pay some bills, do whatever you gotta do. Just don't plan on sitting in front of your computer all day. A half hour at most if you're watching this, if you're not working or whatever, you're watching the market. You're not going to will the stuff up. Take your profit, don't think about it, because what ends up happening is if you don't have a strict rules, this is when the losses start to mount. And they can start off slowly, especially with new traders. What happens is, a lot of people will be like, oh, hey, I bought it at 100, right? Well, I think it's going to 400. They have no basis for their information or their assessment, and they stay in the trades way too long, and they never make any money. And then what ends up happening is they get, they're down 10, 15 bucks. So they say, I'll just take the loss and move on to the next one, because the next trade is going to be the one that's going to make me the money. It's not the way it works. You need to take advantage of the movement in the market, but you need to get paid to lend your money to these companies. That's the way you have to look at it. Bitcoin stuck at the 37.5 level. It's been, I think that's probably the high for the day, around the high for the day, and a low of 35. So now we're back down into basically a $1,500 range. So you can't make any money off something that's this expensive unless you're, and this is where people really get into trouble, because they're wanting to win so bad that they put up more money than they should. So I mean, you're talking a $37,000 product, and you know, if you want to make $100, what are you going to do on a $1,500 move? I mean, you got to start calling tops and bottoms, right? Well, who wants to do that? Who wants to? And what are you going to do? You're going to put 35,000 in and wait for it to move $100? That's how you make $100. You know, with one. It's just simple math, but that's the type of risk taking people are making that gets them into trouble, because they're like, well, I'm going to try to make 100, and I don't want to lose any more than 100, so they end up losing 100. At least it's a 50-50 chance, right? But what you end up seeing a lot of is okay, I want to make 200, but I only want to lose one. Well, the probabilities are, doesn't matter. It's always 50-50 from the time you place your trade. It's a 50-50 bet. It doesn't change. It's like buying lottery tickets. Your chances aren't any better because you buy 2 or 3 of them. Yeah, it just doesn't work that way. But people keep on trying. So keep in mind that it's easier to hit the $100 stop loss than it is to hit the $100 win. I doubt any of the other cryptos are moving. Everything's really range bound. The day's going to come when you start to see this. You go back here and you look and say, okay, we got profit here. It's always above. So you know the market's moving up, right? It has to be moving up, or at least sideways. Still taking profit, still taking profits. This is, 3 months. So basically March, April, May. Then we come in here and we're starting to see a little bit of merging, which you can feel it in the market, right? So your dividends are keeping pace now with your trading profits. Well, what's that mean? It's like, well, you should have a bunch of cash in your cash account. And what that allows you to do, as this market starts to turn over, you'll be able to buy on the way down. And we're not talking like buy next week on the way down. We're talking you follow the rules. But my point being, as this market starts to turn over, your trading profits will be below your dividends, because your dividends are going to continue to pay, right? Because that's a dividend amount. The yield may go up, but you're still getting paid the same amount. So this is the trick. So now when we're coming down, what's going to happen is you're going to increase your position sizes, right? So if you're making $1,000 a month, well, in this case, what did we make last month on these accounts? Dividend profit 555, and you can see the dividend amount is 670, 687. So it's been coming down as well because you've been selling out of positions. So dividends aren't going to be paying as much, right? But so you got 369. That's on pace to either beat or at least stay the same. And what'll end up happening is you come down to the bottom of this next big cycle. It might be a couple years, who knows? But you're going to have dividends that are going to be extremely well paying, right? So you're going to be able to buy even more positions. This is where the snowballing effect comes in. When the market is crashing, this is where people make money. Not shorting it, it's buying more positions and having more power in your dividend side. It's like if you're making, let's just use this number, 555, right? If the market comes down 50%, like in one day, you're going to end up 1,000. You're going to double your dividend amounts. Just you have to look at it from what's actually happening in the market versus what you think is happening. A lot of people lose sight of this and they get scared because uh, they're over leveraged and their scale is too big for the size of their account. Like this is why I say this is how you get up into these 150 share positions with a small account, is because it just never did come back up. But you've been making the dividends the whole thing, so it's a win-win situation. You got, say 20 or 30 by the time that cycle completes that are all max shares. When it starts going up, you're cashing out in 1 year's worth of dividends in less than, whatever time frame you want to put. In a lot of cases, a couple weeks, maybe a month, but you've been collecting dividends the whole time. So it's constant cash flow. We got about 10 minutes left. I'll put together an educational video for the book. But as we can see here, not too much happening. See what happens today. Not much happens on Fridays. You don't get any major pushes or anything else. That was MDT. We talked about that earlier. I'll change this. There we go. Trying to get them lined up. Largest to smallest. See, if you've got the plan, you're going to make money. If you don't have a plan, you're not going to make money. Just not going to happen. This one's been in this account a while. It's only got 67. That's a weird one. Pays every quarter, but I don't even know what it is. I just remember the IMP, iPath, MLP, ETN. It's, ETNs. I stay clear of them. This is the last ETN in one of these small accounts. I can't remember how it got in there. It's not supposed to come up on the scans, but it did, and I just kind of missed it. But I stay away from ETNs and ETFs. I do not trust them. I burned a couple years ago on some, God, what was the name of those? They were some ETNs that were paying really high interest. I doubled my money. I got in early. I doubled my money maybe by a little over 1.5 times just off dividends. but then they shut all of them down. UBS, there was a UBS, uh, Swiss or Switzerland, something like that. I don't know, but they were just paying high dividends, and they shut them down. So whatever they were worth at the time that they were shut down, that's what you got to keep. So of course, yeah, I did lose some money in there, but I had already made the money on the other side. The dividends had actually paid for themselves. I mean, we're talking like 23, 24%. It was ridiculous. It just wasn't sustainable, and I knew that. But I said, well, I'll take the chance based on the numbers on the charts, and it kept going down, kept picking up more based on the scans. It kept showing up on the scans. It was really weird, and we decided, let's get these ETNs off of here. And sure enough, probably within a month or two, they closed up shop and gave everybody what they had left in it. I think they lost like 500 on one, another 600 or something on the other. It ended up being kind of a drawdown of about $1,400, but at that time, everything was coming down. So I can't remember. That was only the losses, I think. It was like 3. It wasn't that big a deal. It was because we'd already made the money. It was a positive experience overall, but I would never do it again because I don't like losing anything. Especially when it comes to a company being able just to fold up shop like that and say, oh, thanks. Because had you got in late, you got fucked. Nobody likes that. See, that's the ITW that we just picked up, the ETN right there. That's fine. Everybody freaks out. It's like, oh my God, I just bought it there. Now it's going down. It's like, it's not the point of the strategy. Let's see how. Let's see. I don't even look when the dividends are being paid, but that's fine. ITW looks like it's. Let's just see. See when their date. August 5th on one. ITW June 29th. So it's not much, right? It's $4, $1.14 that you get paid. Just gotta. It's a numbers game. Multiply it by 1,000. Stop thinking small in terms of profit, because it's the numbers of occurrences that you need to think big. You turn it around. It's just a safer move instead of focusing on one, trying to figure out everything about the company to make sure like Warren Buffett runs around telling everybody to do, make sure that it's a company that's not going anywhere. It's like, okay, so you'll spend what? How many hours researching it? All these companies are paying you something, right? One may go away, but if you don't have all your life savings in that one company, who cares? Shit happens. I mean, Coke could possibly go away. Chances are it won't lot, but KO's been around for a long time, but it can have issues. It's like any other company. Things can happen. Things can change. So like I tell everybody, stop listening to the experts. They don't have a clue. I would never, ever tell you what company to invest in. All I do is I look at a scan that says, hey, this thing has what we're looking for going for it. That's all you got to know. If you just look at our record, you'll be able to tell that the price goes up and down just like a toilet seat. We're interested in taking that profit. If it goes up and hits, we're out. If not, we sit and we keep collecting this 22 cents a month. And if it comes back down here, which it did, but we couldn't, it never did come down to the 50% mark. But if it comes back down here, let's say tomorrow, market crashes, comes back down here, we buy some more. Our average cost comes down by half, and we target the same amount. Rinse and repeat all day long. We got about 2 minutes. Let's take a quick look over. See, nothing's going on. See, the nice thing is if you have your alerts and your trades already in, you don't even have to look at this. You just go, if you want to go for a bike ride all day, you can do it. If you're working, you just put your orders in. Forget about it. It's either going to profit. There's only two things you're doing. You're either buying or you're selling. You're not sitting there looking at it. If you have a predetermined amount that you're going to buy at, you know, instead of going down to Walmart and saying, hey, I'm going to buy it at this price, you can do it online, right? Do you save yourself the time, the money? You just say, I'm just going to buy this and I'm going to pick it up after work. That's all you have to do. It's real simple. Managing your money is the most difficult part for most people because they want to play a video game. All right. So we'll come back later on this afternoon, wrap it up for the week. Post this thing back up here real quick. It's not like, let me stretch it out a little bit here. So I don't know if, yeah, I almost fit everything in there. Just trying to see if there's some other stuff that actually activated. Yeah. But if you're interested in knowing more about this stuff, you just have to understand that, you know, you get your yield, your dividends, your limit price, your veg, and then your last price. Last, that has to do with Friday night's close of last week. This will all change for next week. You might have one or two, you might have 10 on here that are the same, you might have a bunch on here that you already own in your portfolio. There'll always be a new one, and we never know the size of it because there's a bunch of metrics that go into our scans. And just know that if you have under 100,000 in your account, that do not trade these ones. They're too, it's not that they're too risky. What it is it's the scale's too large for your size of portfolio. Once you get over the 100,000 mark, you can do it. We trade these on other accounts, or in trade and invest. You know, to make that clear. But other than that, looks like we're going to have kind of a slow moving day. We'll see what happens. So have a good rest of the day. I'm going to try to get outside and enjoy the weather.